Welcome to Explain the Charts, where we break down the market news and technical analysis to help you make informed trading decisions. Today, September 26, 2024, we're looking at USDJPY, the US dollar versus the Japanese yen. The recent news surrounding USDJPY is centered around the divergence in monetary policy between the Bank of Japan, BOJ, and the Federal Reserve, Fed. The BOJ is expected to keep interest rates low for the foreseeable future due to concerns about Japan's economic growth. Meanwhile, the Fed has been more hawkish, hinting at continued interest rate hikes to combat inflation. This divergence in monetary policy has made the US dollar more attractive to investors, leading to its recent strength against the yen. Furthermore, the recent U.S. Personal Consumption Expenditure (PCE) report, a key inflation indicator, is expected to influence the Fed's future monetary policy decisions. A strong PCE report could further bolster the U.S. dollar and put downward pressure on the yen. Overall, the news flow suggests a continuation of the U.S. dollar's strength against the yen, at least in the short term. Let's take a look at the one-day chart of USDJPY. We can see a clear upward trend in the pair over the past few months. The price has broken through several resistance levels, indicating strong bullish momentum. One key price level to watch is the all-time high of 147.21, reached in July 2024. If the price breaks through this level, it could signal a further significant rally in USDJPY. Now, let's switch to the one-hour chart. Here, we can see a consolidation pattern forming, with the price trading within a tight range. This suggests a potential pause in the upward momentum, but it's too early to say whether this is a trend reversal. The one-hour chart also shows that the price is currently testing the 50-day moving average, which can act as a key support level. If the price breaks below this level, it could signal a short-term correction in USDJPY. However, if the price holds above the 50-day moving average, it could continue its upward trend. Let's zoom in on a specific range of candles on the one-hour chart. We'll focus on the past 24 hours, from 10 a.m. Universal Time Coordinated on September 25, 2024 to 10 a.m. Universal Time Coordinated on September 26, 2024. During this period, we can see a clear downward trend in USDJPY, with the price breaking below the 50-day moving average. This short-term correction suggests that the bullish momentum may be fading. However, it's important to note that the price has bounced back from the 140.00 level, which has acted as a strong support level in the past. Now, let's move to the 15-minute chart. Here, we can see some choppy price action, with the price moving both up and down. This suggests a high degree of volatility in the market, making it difficult to pinpoint clear trends. However, we can see that the price is struggling to break through the 145.00 level, which has acted as a resistance level in the past. If the price can break through this level, it could signal a further short-term rally in USDJPY. Overall, the chart analysis suggests that USDJPY is currently in a consolidation phase, with the price trading within a tight range. The bullish momentum that drove the pair higher in recent months may be fading, but a clear trend reversal is not yet evident. The price is currently testing the 50-day moving average on the one-hour chart, which is a key support level. If the price breaks below this level, it could signal a short-term correction in USDJPY. However, if the price holds above the 50-day moving average, it could continue its upward trend. On the 15-minute chart, the price is struggling to break through the 145.00 resistance level, which is a key price level to watch. If the price can break through this level, it could signal a further short-term rally in USDJPY. Ultimately, the direction of USDJPY will depend on the upcoming economic data releases, especially the US PCE report, and the Fed's subsequent monetary policy decisions. A strong PCE report and continued hawkish rhetoric from the Fed would likely strengthen the US dollar and put further downward pressure on the yen. However, if the economic data disappoints and the Fed signals a more dovish stance, the US dollar could weaken, potentially leading to a bounce back in the yen. To summarize, USDJPY is currently consolidating, with the price testing key support and resistance levels. The 50-day moving average on the 1-hour chart is a crucial level to watch, as a break below it could signal a short-term correction. The 145.00 level on the 15-minute chart is another important price level, as a break above it could signal a short-term rally. The upcoming US PCE report and the Fed's monetary policy decisions are the key factors that will likely determine the direction of USDJPY in the short term. If the economic data and Fed rhetoric remain hawkish, USDJPY could continue its upward trend. However, if the data disappoints and the Fed signals a more dovish stance, the US dollar could weaken, potentially leading to a rebound in the yen. It's important to monitor the news flow closely, especially any announcements related to the BOJ and the Fed, as these could significantly impact USDJPY.